what candlesticks means, what's candlestick psychology. So this is what we are actually considering on Monday. Today, we are going to have a review of that on a practical aspect of it so we can see it play out on the chart. So I go to the trading view. Please note what we are interested. We're interested on understanding candlestick psychology, order block, and liquidity. So for that reason, when we go to the chart, one of the things we're going to find a way is to identify the liquidity. What is that particular thing that candles are doing right now? Also identify how the market posts. These are the things you need to watch out for. How does the market pause play out? What does the market do to form liquidity? How does liquidity engineering plays out and order block? So just have that in mind in your notes. Jot that down. This thing we are talking about happens every day on the charts. The market plays this thing out. I think I should go on a real time today on gold so we can see how these things are being engineered on a daily basis. It also plays out today. Like I was speaking with FX Master, that I've been working on that setup since morning till this evening. So when we talk about candlestick psychology, what we're referring to is what these candles are doing in this area. What are they doing in this area? That's candlesticks psychology. What are they doing in this area at this particular time? That's candlestick psychology. To start reading your charts, the rules remains the same. The rules never change. First thing first, go to a higher time frame. As you can see, I'm not using any guide than what I taught to people. When you go to a bigger time frame, on a bigger time frame, that is daily or weekly, whichever one. I like using daily for simplicity. What we are looking at on a daily is we are looking for direction. Where is the market going? Obviously, you can see the predominant direction is uptrend. The market is going this way. See, the market is going this way. That is it. The market is going like this, like this, like this, like this. So there's nothing you're going to tell me this thing is still going to go like this. That is it. For that reason, the market is uptrend. So since the market is uptrend, what we're going to do is that we are going to be looking for a buying opportunity. Many times we might have a sales opportunity, but we are not going to go after a sales opportunity. We're going to be going after a buying opportunity. Because though sales opportunity might come out and we might make profit in it, but it's not very safe. Yes, it's not very safe. Until one, the market break the last low. This is one thing. If this candle that is coming here break this low, if it breaks this low and close here, not just with wick but with a full body, break and close there, then is a shift in market structure shift, MSS. If this happen, but if this does not happen, it's still an uptrend. This is the last low. Yeah, this was the previous low, the low before this one. And you can see that this low was not lower than this one. The similar thing was here, The similar thing was here. So you can see that we are in an uptrend. No matter how the market will pop down, we are still in an uptrend. So that being said, we move forward to a smaller time frame to find markets, liquidity, market mechanics, market manipulation, market structure, anyhow you're going to keep your mouth and call it. You might step into 1 hour to see the market structure. What is the market doing? What is the market structure? That's what we're going to be looking at for at this time. What is the market doing currently? So now that we come into 1 hour, the market is selling under 1 hour. Yes. So the market that is selling under 1 hour does not change the trend. It's just a correction. The market is doing a major correction. This does not change the overall trend. No, the market is just doing a major correction. That's what the market is doing. So this does not change the overall trend. The overall trend still remains valid at uptrend. But in 1 hour, we are seeing the market doing impulse. Let me go to 4 hours so you can see the impulse and correction well. You can see the market creating impulse, and correction. This whatever is happening here is just a correction. That is it. It's a correction. So it does not mean that the market have changed direction. No, the market haven't changed direction. Everything that is happening here is a correction until that low on a bigger time frame is broken, and being on gold, the chances is very rare because gold is known to be a safe haven. Yes. So that being said, we go back to our 1 hour. What we're going to be looking for is still going to be a buy setup because the overall trend is bullish, but here is a downtrend on 1 hour. Since the overall trend is bullish, it will be very tempting for you to sell. Yes, you might want to sell, but you're not safe selling because the overall trend can do anything. So this morning, once I come to my chart, watch what I do. Although this is not part of what I'm supposed to teach you people today, but let me just tell you. What I do is that first of all, I mark out key zones. Short key zone as Asian lows, Asian highs, London lows, London highs, so that I know where I am. So I want to show you people. Remember, we're talking about candlestick psychology. This was today, Asia opens. This was their low, Asia highs and Asian low. That was where they were. Let me go down to 15 minutes so you can possibly see what plays out there. So on 15 minutes, Asia was manipulating within this area until London session opened. Now that London session has opened, there are people that put their stops within this area. So what London session would do is to clear liquidity. It's buy up to Asian high and clear some liquidity, then sell this way and create a fair value gap here. Can you see this FVG? Can you see this FVG here? Return to this FVG. One is return to the FVG. Remember, we're explaining candlestick psychology. Return to this FVG, then stand on this FVG. London sell aggressively to this point. Aggressively. So that was London session. So now, what are we talking about here? Candlestick psychology. Now, this is happening at a key area. Watch what I want to show you. This candle is happening in a key area. This particular doji candle. So since this is happening in a key area, it becomes sensitive. This is a rejection in the market, okay? A rejection in the market. We're talking about candlestick psychology. What is this candle doing? It's a rejection. It's no longer going down. So when we see this kind of market, this candle here, what this simply means is that sellers were pushing the market down. Buyers does not allow the market to continue going. Now this is a confirmation that buyers is about taking over. What do we have here? It's a rejection candle. Then we now have these other candles pulling up here. Then when it gets to this area, it now created another rejection from here. It created a long wick from here, telling us that sellers does not want to allow this market to continue again. No. When I say psychology, that's what I mean. Here, buyers did not allow it to go, but here, sellers did not allow it to come, to continue going up. So the sellers took over the market, which gives us a bearish engulfing. A bearish engulfing. Now, when you give us the bearish engulfing, remember that here, buyers are under here. Buyers does not want to allow this market to go down. Buyers push the market up. At here, the market went up, and they keep manipulating here. Question is, what were they doing? And what was I waiting for that I did not release this setup since morning? Now, that takes us to the second thing we discussed on the trading, which is known as liquidity. This market cannot move without liquidity being grabbed. I don't know, I'm going to keep my mouth and explain this part for you to understand. This market cannot move without liquidity being grabbed. In the video, I showed you this as a picture. But this time, I'm on a live chart. This market is to go up. New York session are to send this market up. This market is rejected. But this market cannot move if it does not grab liquidity. So they have to create what we know as liquidity engineering by creating this double bottom. This double bottom becomes liquidity. Liquidity that the market needs. Within this time, in short, starting from here itself, people started buying, putting their stop loss under, buying. At this point, this is 3:15. People started buying up till this time. By 19 o'clock, there was news. 19:30, there was news. That's 7 o'clock. They used the news energy to sweep liquidity. I don't know if you can see this playing out. Can you see what they did at this point? They have cleared everybody that put their stops within this area. Everyone who put their stop loss within this area have been shoot out of the market. They have been able to grab liquidity. So what they have just done here is known as liquidity. This is what I explained to you people. That it's not possible. This market wants to go up. Definitely this market is going to go up because buyers are on that year. This is a strong psychological level. Buyers are here, heavy. But buyers also understood that in order for this market to go up, they need liquidity to fuel the movement. So for that reason, they need to allow this market to come down here and collect a good volume of liquidity. After collecting the liquidity, they will move up. We don't know how long it's going to be. But by the way, everything I'm teaching here is for teaching sake. It's not guaranteed. There's nothing in the market that is guaranteed. Technically, this is what happens in the market. So this was the previous low. This candle here has right to go down. They have the right to collect liquidity down to this point. Down to this point. So if your stop loss to be in the market should be below this area from this point, that's where you should think of bringing your stop loss into the market. Below this area is where your stop loss should think of being in the market. You should not think of putting your stop loss in here because this is liquidity. Liquidity must be taken first before an impulsive move will happen. And did you notice that the moment they take that liquidity, the market that was pushing down starts consolidating? Let me go to 5 minutes so you can see the pressure that they were using to push down. Now take a look at the pressure they used to push down. The moment they push to this place, they start consolidating. What they are trying to do here, let me tell you so they can understand, is they want to deceive people that they're going to sell. They want to deceive people that are going to sell. So people will start selling here. People start selling, putting their stop loss within this area. Now, note a lot of people have been kicked out within this area. A lot of people have been kicked out within this area. People that were buying and putting their stop loss within here, they have been kicked out. As a result of that, in order for them not to lose more money, they will start selling, thinking the market wants to sell. So they will sell. Once they sell, they will put their stop loss within this place. Eventually, this is what is going to happen. Eventually, they will sell small and boom, get to this place. Just like I showed you earlier, create a fair value gap, come back to the fair value gap, boom, and fire down, fire to heaven. That's what 9 out of 10 have to happen. Yes, that's a possibility that has to happen. If you're going to become a profitable trader, you must be able to see what the market is doing so you can protect your capital, protect your money, trade in the right way, trade with confidence. This doesn't mean that you're not going to have losing trade, but even when you run losses, you're going to understand why are the losses in the market. You're going to understand it. If this market finally violates this structure, you can't kill yourself. I can't even kill myself. Yes, that's why we have stop losses. It's very possible that this market can violate this structure. But 9 out of 10, he has taken liquidity. After taking liquidity, he's supposed to go back to where it came from because he has made the money, he has made the profit. That is it. Now, we have covered liquidity. We've also covered candlestick psychology. Candlestick psychology means what is the candle doing? What is the strength of the candle? What is it telling us at this particular time? For us to have this doji candle at this point, this hammerhead we're having here, what is it telling us? It's telling us that the strength of sellers has finished. Buyers are relatively taking over. That's what it's telling us. So if buyers are taking over, buyers will not just take over like that. Buyers need to take their liquidity first. Liquidity is the fuel that moves the market. So they need liquidity first before they start moving the market. No matter what, they need that liquidity before they can start moving the market. That's the meaning. So they must take liquidity first of all. So at this point, they've taken liquidity, and the liquidity can go up to this point. That's just the point. But at this area, liquidity is taken. We're expecting them to push back to where they came from. That is on that note. Then lastly is order block. Order block. You need to observe when there is an order block in the market because order block happens to become institutional footprint. Once you're able to spotlight order block in the market, you're going to see where the market will relatively turn, where the market has the possibility of reversing. An order block is the last candle before the impulsive move happens in the market. Let me say that again for clarity's sake. An order block is the last bearish candle. Let me say so. If it's a bullish trend like this, the last bearish candle before the impulsive move happens in the market. That is an order block. Let's use this to be a valid order block. So anytime price come to that area, it will bounce to react, because that's where institutions are taking their order. That was the last bearish candle before the impulsive move happened in this direction. Although that candle is not that, this move, let me increase this for you to see. Although this move, this particular candle here, this move was not really big, but did you see that this area cover up till this point that we have this candle that move and give us a fair value gap? A valid order block must have a fair value gap. Yes. So this particular green candle here is the one that has the fair value gap. So if we want to consider this red candle as the order block, we would like to increase this to this point. Can you see now that anytime the market comes to this place, it reverses? So anytime the market comes to this point, it reverses. Then come to this point, it reverses. So this was the order block. So we'll consider it this way. Now, why we consider it this way is for the safety. If we consider it like this, listen, if we consider it like this, we will become a liquidity for the market. Yes, if we consider it like this, so we'll eventually put our stop loss here. And by this time, we would have been kicking out of the market. That's just it. Would have been kicked out of the market if we consider it this way. Although, if we have placed a trade on a risk to reward ratio of 1:2, possibly would have taken profit by now. So let me just give a trial today. Possibly would have taken profit by now and leave the market. Yes. Risk to reward ratio of 1:2. So at this point, would have taken profits at 1:2. That's 2. Would have taken profits. But if you're targeting the previous high, then you would have been kicking out of the market. If you're targeting where this move is going to go, you'll be kicked out of the market. So you can see the order block. So me, I like to cover this week, because me, I know this is where they might possibly come back to. That's the first thing. So confirm a valid order block. Once you confirm a valid order block, you can now know where the institution will move. So the institution can enter the market at any point. But the point is that they need to take liquidity. So then we get the order block. We've got their liquidity for them here. This is the liquidity. Since that is the liquidity, they must sweep low this, so that every stop loss that was under here will be closed. Every stop losses that will be under here will be closed before they can move. I hope you're learning. If you're learning, go to the comment section and say, I'm learning. You don't enter the market randomly, because if you do that, you fall a prey. I've done 3 things in this class. 1, candlestick psychology, which is what the market is doing. Did you notice that at each of these points, the market is always pulling out a rejection candle? At this zone, the market is pulling a rejection candle. It does not want to go down. No, it's not going down. That's candlestick psychology. Do you understand? It does not want to go down. So this thing that is going is just an engineering, liquidity engineering is what you're seeing here. This market does not really want to go down, but that's not 100% sharp. That's the first thing we have covered. Now, when I said that does not really mean that that's the only candlestick psychology. We have other information on candlestick psychology. The next thing we've covered is liquidity, just like you've seen on 15 minutes, liquidity being collected in the market. Yes, liquidity being collected at this point. Trust you can see before they're about to go back. So that's another thing we have covered here. Then the last thing is an order block. We have also covered order block.